Hi, thanks so much for joining in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're joined by the management of HEG. I'm joined by Manish Gulati, who's the executive director of the company. Manish, thanks so much for taking the time. And we're here to talk about your Q2 results, as well as the rest of the financial year, the outlook. Without going into too many details, because I want you to speak more than myself, it seems like you're facing pressure on the demand side, and at the same time, you're unable to really get any benefit or any leeway on the cost side, as a result of which the margins have shrunk quite substantially. Could you talk to us about these two levers and what's currently playing out?
Yeah, good morning, Alex. Let me first start by giving a 1 minute background. See, we make graphite electrodes, as you know, and these are used by electric arc furnaces to make steel. Now, you see, what is happening is that electric arc furnace steel, other than China, almost comprises today 50% of the steel made in the world, other than China. This used to be 44%, let's say, in 2015. So the share of electric arc furnaces is growing among the steel making composition, is growing much faster than blast furnaces. In fact, blast furnaces are now being discouraged due to decarbonization efforts which are happening, because blast furnaces emit 4 times more carbon than an electric arc furnace would. So the demand for graphite electrode is going to grow just because the shift from blast furnace to electric arc furnace is happening. I'll come to you the short-term questions which you asked. You see, already we have announcements of about 85 million metric tons in the world, which are going to come right from 2003 onwards to 2030. So out of this, till next year, these are the steel plants which are under construction. That number is about 27 million tons.
What is coming from now to next year?
Now to next year. So that is 27. Out of that 27, 10 has already happened. We can see. So this shift towards electric arc furnace is just going to grow and grow and grow. Now coming to the short-term thing, because of the geopolitical uncertainties, the high inflation, the interest rates, the production, particularly in EU, is down, which is bringing pressure on this demand. And also all the steel companies are wearing down their inventories thin. So there are no extra inventories of graphite electrode in the system, which means that when there's an uptick in demand, uptick in production, it'll immediately result in demand. Now coming to the questions which you asked, see, in the quarter one, we were close to 90% capacity utilization. In quarter two, we were close to 85. Going forward in the 2 quarters, October, December, we are going to be around 75%. Okay. But that is fine, because we see this as a temporary trend. And obviously, when all the industry steel capacity utilizations are down, every manufacturer tries to get that incremental ton, which exerts pressure on pricing. Coming on the cost side, our main cost is the needle coke. Now, needle coke prices have also been coming down quarter by quarter, but takes a while to reflect in our system, because we have 2 months of processing time, and then since everything is imported, we have 2 months of stock. So, but it's coming. I mean, the spread, the electrode prices are coming down. They're definitely under pressure. Needle coke is also helping partly, but that is coming with a lag effect. So that is why you see the margins which are squeezed. But Alex, I strongly believe that it's a matter of 2 to 4 quarters that we will see. Once these the global situation starts to improve, the production will go up, and there are no inventories in the system. So I believe that it's a matter of 2 to 4 quarters before it starts going back up.
Manish, you had an expansion in capacity. I'm just trying to understand, since this is the first time that I'm speaking to you, when did that come on stream?
We declared it on stream on 1st of November. It has been under construction for last 3 years. And most of the processes were on. Only one process was yet to start, which has also started. So from 1st of November, we are now a 100,000 ton capacity plant.
Okay. So it's not in it wasn't in the second quarter. Second quarter, it wasn't available.
No, not at all. In fact, it would be actually technically available in the fourth quarter because of 2 months processing time. So if something has come on stream on 1st of November, it'll obviously the product will be out in the from 1st of January onwards.
Understood. The reason I'm asking is because you're saying 75% capacity utilization in the third quarter and in
Right.
the fourth quarter, correct?
Yes, that's
So
right.
therefore,
So
the
for
fourth
the last quarter,
yeah.
yeah, for the last quarter, I will consider 100,000 tons and work 75% of that. So
So
October
therefore,
to
you're
December,
expecting demand to improve in the fourth quarter, yes?
we hope so. Yes.
Okay, so based on what you've told me, I'm just trying to understand what was the volume in the second quarter? So you're saying 85% of 80,000,
Of
correct?
80. That's right.
Okay, so and I'm trying to understand in the geographical mix, and you have several countries that you export to, and you're primarily an export-led company, I'm understanding.
Right.
Has the mix changed in the first half in terms of geographical spread?
Not very much, Alex. We still continue to serve other than India. Let's say one third of our production is sold in India, and then our next most important market is US, which is where all the action in electric arc furnace is happening much faster than the rest of the world. It was already at 70% capacity utilization, and after US, then we come to Middle East and Turkey, and then Europe and Southeast Asia. So this has been a spread which is it has not changed much. Yes, we have consolidated our position in US, you may say, and but it's quite. I mean, 40 countries is where we export to.
So
It's not been. Sorry.
understood. So you were saying needle coke prices have come off a little bit, but
Yes.
because of the inventory that you held, you were not able to get the benefit of that. Will you see it in the third quarter, the benefit of that?
No, but still not. No, we'll still not see third, fourth quarter just because the electrode price is also coming down rapidly.
Okay.
So that is the problem. So, but for
So that
example,
pricing pressure is not allowing you to gain the benefit of the raw
benefit.
material cost.
As needle coke prices are coming down, although with a lag, the electrode prices are also coming down.
And that's because demand overall across the globe is subdued.
Demand is substitute. That's the issue.
Okay. I'm just trying to understand. Now you're saying 75% capacity utilization in the third quarter and in the fourth quarter. You don't have the ability to control the lever on the cost side. So therefore, how are you curtailing overheads, and particularly going into the fourth quarter with that additional capacity? How are you adjusting that? Is there any way to curtail costs to bring some sort of stability or improvement in margins?
See, we have the first most important action we have taken is that we have run down our raw material inventories to the maximum extent possible.
Okay.
Because we want to now we are keeping it very lean and thin. Although we do continue to maintain, let's say, a month and a half extra of finished goods production, just waiting for the demand to come back, and we should be ready by then. So this is one thing which we have done successfully to run down our inventory levels. Also, since we have made this plant exactly within the same premise with the same people, our overheads for a 100,000 ton capacity are going to be among the lowest in the world.
Understood.
So we already were most cost competitive, but this going to 100,000 ton will make us even more cost competitive.
What about the other metrics in terms of debt levels and in terms of cash on hand? I also understand that there is some more expansion that you're planning. Could you take us through that?
See, about the cash, we have 1,000 crore almost.
Yes.
Gross, and excluding working capital, it's about 300 crores. So that debt is just because of the working capital, which is normal, which every company has.
Yeah.
I mean, going forward, I think this is only going to improve. The capex of 1,200 crores is already done, barring a few crores here and there. That's complete. So there's no more money needed for the capex for 100,000 ton.
So, but then would you say then that FY25 and for at least, so how long will you be able to use this 100,000 capacity for? How many years are you okay for?
I mean, the 100,000 ton capacity, I mean, if we are working at, let's say, 80%, 85% today, and we are adding 20,000 more to that, I believe that will take 1 year that we go back to that same 85% level for 100,000 ton.
Okay. But then, so my question effectively is, at what point do you decide to augment further, or can you not take a call till that demand comes back?
You see, at this present location, we are pretty much saturated.
Hmm.
So now, if we have to think already, I mean, we have become the third largest company
In
in
the
the
world.
world.
Yes.
We were the largest plant anyway for many years, but
Yeah.
we have become even more. But as a company, we are the third largest company in the world. So
Hmm.
for the next quantum leap, we have to wait for 2-3 years for all these electric arc furnaces to come and the capacity utilizations to go up. And then maybe, God willing, we would be in a position to take a call. But that'll be 2-3 years later.
Last question, I think, see, from the perspective of your investors, I think they're going to want some element of certainty in terms of what to expect. Would you say that the second half is going to be tougher than the first half? Volumes are going to decline, margins are going to be under pressure, they're going to potentially decline from this point as well?
Yes, but only for 2 quarters. Yes,
So
there'll be under
starting of
pressure.
next year.
Yeah, yeah. So this H2 of this financial year is going to be lesser than H1. We'll still have a squeeze, slowly increasing, but it's a matter of time, and just to maximum 4 quarters, that things will start coming back up, because you need the steel production to start going up. And the moment it goes up, the electric arc furnace takes the major advantage because they are quick to start up and boost their production.
Understood. Fair point. Manish, thanks so much for joining in. Pleasure speaking with you. And I think a lot of people that were not familiar with how the graphite electrode business works and what the levers are, they have a much better understanding now. So thank you so much.
Thank you. Thank you, Alex.
All right, viewers, there you have it. The management of HEG. Do stay tuned. Lots more coming.